All right, welcome everyone. Really excited to have, as part of our first fireside of the day, two titans of industry here. We're going to zoom out a good bit and really talk about the broader state of crypto and even probably a good bit of macro as well. There's certainly a lot going on that is super interesting these days. Dan, welcome back. You and I were on the same stage last year. Tom, thank you for joining us. This is your first time, but obviously, hopefully not the last. Before we dive into 2026, let's very briefly revisit some of the highlights of 2025. It's really hard to believe it was only a year ago that we were doing this last time. There's been a lot that's happened. Certainly, we saw Bitcoin and Ethereum hit new all-time highs. We've seen significant retracement from that. We've seen tokenization continually moving from theory into practice. Stablecoins processing even more volume than I think even some of the most bullish stablecoin people would expect. More IPOs of crypto-based companies, and regulatory headwinds turning into regulatory tailwinds, perhaps. So what we're here to talk about is what's next. You were already briefly introduced by Ian on the way in, and I think probably everybody knows who both of you are, so I think we can really just dive right into it. We've all seen multiple cycles. We've all seen the bullish part, we've seen the bearish part. You guys have weathered that extensively. You're also all probably well known for making really great predictions and nailing those predictions far more than people on Wall Street are comfortable predicting, first of all, and then second of all, the actual track record. Certainly volatility is happening right now, probably forecasting more for 2026, but what are we thinking about right now? Like, what are we thinking about the market in particular right now? And I guess, Dan, if you want to take it away, we can start with you.
Thanks. Yeah, I'll admit that if you had asked me on New Year's Day 2025, with all the things that Justin mentioned happening, pro-crypto SEC, all these great developments, stablecoin legislation, market structure legislation, being passed by the House, all of these things, and you would have said crypto, up or down? I would have said up. And it was down 9% last year. So that is a surprise. And I think my takeaway is, when your blockchain is going to change the world. And so when you have something that important, there is a hype cycle to it. And sometimes people get ahead of themselves. Sometimes they get too pessimistic. And this is actually our fourth cycle in 13 years of trading. And they're actually pretty similar, for better or worse, is in the bull market, we all think we're geniuses and it's all great. And then now everyone's like, oh, it's failed, it's terrible. And, the perspective I would have is, to always be thinking 5-10 years down the road, not, 5 or 10 minutes down the road. And one of the important factors really is the 4-year cycle. When I first heard about it in 2013, I was like, hey, if we all know about it, it can't happen. But it does keep happening. And three or so years ago, when Bitcoin was at like 20,000 or something, we did all our work from our previous 4-year halving cycles and projected out where Bitcoin would be in this cycle. And we said, hey, our forecast would be Bitcoin would hit $117,452 on August 11th of 2025. And when we said that right after FTX and Terra Luna, everyone thought it was super crazy. And it did, literally, that day. And so we had a call with one of our investors who said, hey, great call. You guys should be so proud of yourselves. But doesn't that mean it's going to go down tomorrow? I was like, oh, no, this time's different, And it wasn't different. And so, I do think we are in that, historically, it's been about a year, very consistently, of a down market, and then about 3 years of an up market. And unfortunately, I think we're in that. And the last bit of the kind of historical thing is I think that there were two huge inventions that are kind of the same, publicly listed ETFs and then publicly listed digital asset treasury companies. Really, really cool. And a huge number of people piled into them. Collectively, they bought over 100 billion of crypto. And we've kind of run that kind of initial course. And so without a 100 billion buyer, it just kind of reset.
Tom, same question to you, I guess.
I might just add to Dan's comments because I largely agree. I know when I was just recently at the end of last year in the Middle East and meeting with a lot of the original Bitcoin folks, many think there is a 4-year cycle, and that is affecting their behavior. So these folks who've made a lot of money in crypto and their life cycles have changed because they might have been 20, 15 years ago. Now they're in their 30s and have other life decisions. They've been acting as if it's a 4-year cycle. So some of it is self-fulfilling. But to me, I think there are differences, which maybe want to highlight versus the similarities. The first is usually activity on chain starts to turn down in the 4-year cycle, and that's not happening. Like if you look at Ethereum, active addresses have actually been accelerating higher. Daily activity has actually been accelerating higher. Even total value locked on chain has been going up. That's not what happened in, let's say, even the last cycle. I think that there has been already, an accelerated deleveraging that's taken place. I think October 10th, front-end loaded all the deleveraging. I mean, that was a bigger wipeout than November 2022. The thing is, November 2022 was the last cycle low, but the amount of leverage wiped out was bigger on October 10th. So that was front-loading something a year early. And then the last point I'd make is there's a 4-year cycle, but then there's also the business cycle. And I think if you look at like ISM, for instance, actually no Bitcoin cycle has peaked without the ISM peaking. So in other words, this would be a break of the cycle. But part of it is because the ISM's been below 50 for a record 36 months now. It's the longest in 100 years of data for ISM. It's never been below 50 for this long. And then the second is things like gold versus copper ratio, which kind of is a proxy for industrial versus monetary base. Gold copper has been at a cycle low. Every Bitcoin high has actually coincided with copper actually peaking relative to gold. So I think it could be a 4-year cycle, but then the things that normally link to the 4-year cycle actually are different. So I'm going to be in the camp that I don't think it's a 4-year cycle. So I'm not trying to disagree with consensus, but I think we've already front-loaded a lot of it.
Makes sense. I guess maybe we can dive in a little bit more into sort of what's going on with some of the other dollar devaluation, debasement type things that are going on more broadly on Wall Street, namely gold, silver, other metals. You hinted on copper a little bit. Do you think there's merit to that as being some sort of moving away from the very common thing is people call Bitcoin digital gold. We've had a divergence of the behavior of those assets here in the short term. Is that something that you think has something really changed, or is this just a temporary thing?
Crypto is reflexive of prices. I mean, and I think it's changing because now the blockchain, as Dan said, is actually finding a lot of utility. I think there's a lot actually being built on the blockchain. But if we look at historically, crypto drew a lot of its legions of users and actually traders because of price. So when crypto's price isn't working, crypto traders are trying to find things that are working. And I think the biggest trade over the last 6 months, and I can see it from our institutional engagement, and of course, if you could see it on social media, or even just go to Reddit and look at Wall Street Bets, the 2 most traded tickers are gold and silver by a country mile. Like just Google Wall Street Bets, most active, and it's exponentially 10x anything else. And so I think gold and silver's rise, and there could be fundamental reasons, but the price momentum there has, I think, drawn money away from crypto. That being said, I don't know if it's really scary signal, because I think a lot of our institutional clients at Fundstrat think that this is a sign that the dollar is about to crash, or there's geopolitical risk, or something's wrong with the plumbing, like that there's going to be some bodies floating, and a lot of people think it's going to be a commodity dealer or a major bank that's short one of these things that's about to have a huge capital call. I personally just think it's more prices creating momentum. But I'd love to hear Dan's take on this.
Thanks. Yeah, I really do think there's a big macro shift happening. The willingness of all constituents just to print money is just off the charts now. 10, 20, 30 years ago, we had an independent Federal Reserve. We had a Congress that balanced the budget, in the 90s. And it seems like both parties and, kind of all the constituents in the U.S. and then often in foreign countries are willing just to print. That is so bullish for crypto. And it's bullish for gold, too. And I think, the perspective I have is, it's funny, our current president is negative on Jerome Powell. And we've been very negative on him since 2021 for not hiking rates high enough. And the president's complaining they're not low enough. And paper money is being debased at 3% every year. And that's called stable money now. Over your lifetime, that's 90%, so it's totally rational to invest in something with a fixed quantity like gold or Bitcoin. So, I really think there is a big kind of change in people's mindsets with this new, kind of ease at watching paper money be debased. And we once did a cool graphic that I think is still in our Twitter feed of essentially the price of paper money so it's US dollar priced in bushels of corn, barrels of oil, ounces of gold, Bitcoin. And that's really the story, is paper money's crashing, not that real estate's at a record high or that S&P's at a record high or Bitcoin's near a record high. It's really paper money is at a local low, but over the next 10, 20 years, it'll keep going down. So people keep cycling through, and we do track the gold to Bitcoin ratio. And yeah, gold got way ahead, but they do alternate back and forth. And actually, I think it's kind of cool that the total inflows to ETFs for both gold, old school gold, and digital gold, Bitcoin, are about the same over the last couple of years. So, markets, they kind of get excited about one thing, and it goes up a bit more, and then I think it'll cycle back into Bitcoin, and it'll catch back up to gold. And 10 years from now, Bitcoin will massively outperform gold. That's very obvious.
So do we think that the new nominee for Fed Chair Warsh is going to exacerbate that, continue the current trend? Question mark, to be determined?
That might, I think Dan may know more than me.
Yeah, I've met with him a handful of times over the years. He's definitely super smart, but it is really hard to know, kind of what the stance is now. Obviously the Fed should be independent and should make its own choices. And countries that have governments that get involved in their central banks end up being banana republics.
With that, let's turn a little bit towards the more institutional side of the question here. I think over the years we've seen institutional adoption of both crypto and tokenization increasing. Certainly the Bitcoin ETF was a major event, largest ETF launch of all time. How do we feel about where they're at in terms of their adoption cycle? To some extent, we have pretty material deregulation. I think if you chat with major bank executives in a private room, or asset managers, or really anybody within traditional finance, I think they're actually largely relatively prepared. They've been looking at this stuff for a while. They've been doing pet projects for a while. Do we see that side bet turning into more of a larger scale bet? And what really does that mean? Is that something that's positive, from a crypto perspective, or is that something where, they're going to try to sort of co-opt the narrative, perhaps?
I was on a panel with the heads of a bunch of big, huge, publicly listed alts firms, and almost all of them were super negative on Bitcoin and crypto and had no exposure whatsoever. And this is within the last 12 months. And it's like, that's why I'm so bullish. Like, all these $100 billion crypto or alts firms have zero Bitcoin or crypto. And that's why I'm still so bullish. And that's why I think the next 10 years are so good. And I was on a CNBC thing once, and they were like, hey, Bitcoin's a bubble. I'm like, how can you have a bubble nobody owns? Like, you can't have a bubble when the median holding for institutional investors of both cryptocurrencies themselves or blockchain venture is literally 0.0. So that's, that is why I'm so bullish. And then, Tom and I have been doing this for a long time, and the list of reasons to say no to crypto used to be super long. No custodian, and no this, no that, no regulatory stuff. The SEC is trying to kill it. They're pretty much all crossed off, right? And so that is, such a huge inflection point. We, still need one more bill in the United States. But from then on, there really aren't reasons for institutions to say no, given they have, very little exposure. And then, blockchain as an asset class has a 12-year 80% IRR with a 0.2 correlation to the S&P 500. Like, there's never been a better asset class in history. So it takes time, and everyone's reactionary, and it, grinding them down takes a while, but it's inevitable that big institutions will come into our industry. And I think the regulatory stuff in the U.S. is kind of the last big, reason to say no that'll help them get in. And then one of the things that's helping institutions is there used to be this perspective that, crypto's super risky, and we all grew up in the capital asset pricing model era where volatility equals risk. And crypto's super volatile, not gonna lie, it's super volatile. But it's actually not that risky. Anyone's ever owned cryptocurrencies for 4 years has doubled their money or more. And then our venture investing over 12 years, we've only lost money on 14% of the companies we've invested in, which is crazy compared to the real world where 70% go broke. And partly it's our team's good and we work really hard, but partly it's crypto is just so awesome that it, makes most things work.
Dan, by the way, what do you mean by alt firms? Are you talking about alternative asset managers?
Yeah, the big listed alternative asset managers.
I want to add to Dan's comments, but take it from a different angle, which is, are Wall Street firms embracing crypto? And we have our chief operating officer from Bitmine here, Young, who's sitting right there. I'm calling him out because he's going to be working with a lot of traditional Wall Street firms to understand really blockchain. But I have two observations to make. Number one, I don't think crypto is viewed as legitimate within most of the key decision makers of an organization. So there's evangelists, like at JP Morgan. Anybody from JP Morgan here? That's my old firm. But I'd say that, there's obviously a blockchain team, but like at the senior level, the top 20 managing directors and executive team members, I don't think there's buy-in into crypto. And it reminds me of I used to be a wireless analyst from 1994 to 2007, from when wireless was only 75 million users to over 4 billion. And I remember once Bill Harrison asked me to do a Chase board meeting where I talked about wireless. And I think I was 29 at the time. And I went in and I said, see this BlackBerry? This is going to be more important than that phone at people's desks. And Chase is going to spend more money on cellular than landline. And Bill looked at me I kind of was saying something heretic because, the telecom companies were big clients at JP Morgan and Chase. And so I never got invited back, actually, at the board meeting. But that is, that was the reality because, wireless basically was a better business than landline. And I think that's true today. If someone went into a bank and said, blockchain offers finality and speed that your current systems can prevent fraud at scale and speed that your systems can't handle, I think you'd get the same look in a board meeting. But there's already proof because take a company like Tether, which is basically it's a monoline company. It's a stablecoin issuer, but basically operates as a bank. They only have 180 billion of stable coins, tokenized dollars. It's not even 1% of M1. And their profit this year, okay, and I'm projecting because I don't actually have their numbers, but I think if you look at their GAAP net income in 2026, it might be 20 billion, which would make them a top 5 most profitable bank in the world. And just put a, 15 multiple on it, 300 billion or 20 multiple, 400 billion, that would make it top 5 most valuable bank in the world. The thing is, they have 300 employees because they do everything else on the blockchain. JP Morgan, which is the largest bank in the world, has 330,000 employees. So to me, like, it's, crypto isn't accepted. Things are changing, as Justin said, but I think Wall Street wants to hijack that narrative, but I think native blockchain companies are like open source. They may end up being better businesses.
Can you go into that a little bit more? What do you mean hijack that narrative? That sounds very interesting.
Oh, well, actually, I don't want a target on my back or on my front or my forehead.
All right, we can come back to that next year then.
Yeah.
So speaking of especially the more regulated institutions of the world, regulatory landscape obviously always is a part of the conversation. We have potentially new legislation coming through, for example, the Clarity Act. What are, will passing this be meaningful? What is this, like, how are we thinking about this from the side of, more crypto native people looking at this regulation versus, say, banks looking at this regulation? Maybe Dan, if you want to take that.
Yeah, I would say that, people in our industry basically have Stockholm syndrome. We've been tortured by the government for so long that we don't remember how crazy it is that the Securities and Exchange Commission was suing two of the best companies in this space, Coinbase and Ripple Labs, right? How's an institution, like you're a public pension plan in some state, you're going to run it up to your state legislature, hey, how about crypto? It's just not going to work. And so it is night and day to have clarity on what is a security, what's not a security, what can people do, what can't they do. And so I think that you really can't emphasize how big that is, because we're going from such an incredibly negative point to now I would call it neutral. Like, most countries are neutral on crypto, and hopefully the United States will soon be neutral. And one of the important points is all of the crypto entities were fleeing the United States of America. I was on a panel with a CEO of crypto, and the moderator asked a question that I didn't even consciously know. He's like, 19 out of the top 20 protocols are based outside the United States. And that's bad. That's the opposite of the internet, right? All the major internet companies in the world, or in the free world, are in the United States. So I think this is massive.
Tom, any thoughts?
Again, I am a little confused because I agree with Dan. Like, I think it's positive in the sense that legislation is passing that's pro-crypto. But in the back of my head, I remember something about the telecom industry, which is the telecommunication industry used legislation and their real deep tentacles into Washington to create structure that favored them over, as an incumbent, over new entrants. So the wireless industry was constantly handicapped and chopped at the knee because the telecom industry used regulatory arbitrage. And there were simple things, sorry for too much detail, but like, these trunk lines, they were called T1s back then. Like in New York City, you connect today with, your fiber line to New York 9X at the time or whatever. That would cost you $20 a month if you were a doctor's office. If you were a cellular company, you were paying $1,000 a month because that was considered terminating access for a competitor. And I think, crypto regulation, it has a risk of being crafted that way, which would handicap the new entrants, but really create favorable terms for existing companies. And I think part of that is why there's, of course, a big battle taking place with the Clarity Act. I'm, again, not trying to express my opinion. I'm just expressing what I've seen in the past.
Fair enough. So potentially regulation is a catalyst that we see. Are there other catalysts that we're looking at in addition to regulation, perhaps, say, IPOs, other things that are going on? What are you guys seeing looking forward for 2026 in terms of what could be catalyzing change in the upcoming year?
I see a lot of potential catalysts. One of the things that I think people forget is that crypto benefits from adoption. Like more people that use crypto wallets or end up using crypto as a settlement layer the more the network effects take place. And that's why certain crypto projects are doing so well. In 2026, do I think crypto starts to become invisibly more part of everyone's lives? Yeah, I think that's 100% happening, because tokenization of dollars is now making money a digital good that becomes harder to differentiate between like what a dollar is versus a digital good versus what people ascribe value to. In other words, like as we start to tokenize more things, then people just start to think everything is a form of money. And that actually grows crypto adoption. I can see that happening in a lot of ways. Tokenized stocks, trading on-chain, tokenized credit. This is all creating that invisible adoption of crypto and blockchain as a settlement layer. I think there's a lot of mainstream folks that are also going to be launching financial services products, from neobanks to well-known content creators. They're going to funnel millions and millions of people that may actually start to use crypto without realizing they're actually using crypto. And I think that that's a big catalyst. And I think that's some of the stuff you'll see in 2026.
Justin, I would agree. IPOs are so big. Pantera's had 5 companies go public recently. That recycles all that capital, right? Those companies were being held back by the SEC for a long time. They got out. The investors that invested, 10, 12 years ago can then reinvest in new companies in the crypto space, and it really keeps the flywheel turning. And I would say my one very out of consensus view is I think there will be a global arms race for Bitcoin within the next 2 or 3 years. Countries like the United States are establishing strategic Bitcoin reserves. Countries that are aligned with us, like the UAE, are acquiring cryptocurrencies, Bitcoin. The big one, though, is I think within only a few years, 3 years, countries that are antagonistic to the United States will realize, like China, super crazy to have 1,000 years of your life savings stored in an asset that Scott Bessent can cancel. That is crazy. It's way smarter to buy Bitcoin. And so I think within 2 or 3 years, there will be an arms race with 3 or 4 groups, regions, each trying to buy 1 million Bitcoins, and you just want to be long before that happens.
Yeah. Oh, and sorry, and there's one more thing I want to add that is a possible catalyst. One of the things that I'm sure you guys and your analysts who write about AI are talking about is that as we start to have real world AI, like robots and different things operating in what they call the wild, that you're going to want fidelity or sovereignty or proof that these instructions are correct, because otherwise someone will just hack into these things and drive your car into your neighbor's house. And a lot of that is probably going to end up on some sort of blockchain. And if it's an open source project, it'll end up on a public blockchain. So to me, that's another use of blockchain and crypto that hasn't existed in any time in the last 4 cycles. And I think that's another potential catalyst as well.
We almost made it the entire time without talking about AI. That's good. We're coming up on our time almost. We got a few more minutes left here. Maybe a few last comments about any long-term view on things, or we've already had a couple hot takes here already, but any contrarian points that you think should be worth mentioning at this point?
One, I'd love to get Dan's take on quantum risk, because, people, I think some of the reasons I found some institutions are kind of wary of Bitcoin is that there's a lot of talk about quantum capabilities accelerating, and of course that can break the encryption, potentially affecting a lot of the many legacy Bitcoin wallets. I don't know if it's 25% of Bitcoin wallets are sitting as bounty for quantum. But just keep in mind, precious metals has its own, quote, quantum risk, okay? And I'm a fan of gold. I'm not trying to knock gold, but keep in mind, gold is not scarce. There's a lot of gold underground. All gold is extraterrestrial. So if when SpaceX does their IPO and then they have money to launch to Mars, Elon Musk might find a gold asteroid And again, he owns it.
Is that secretly what he's doing all along?
Yeah, he'll have his own store of value, but he'll not only be the richest man on earth, he also is the new central bank, and he's going to just like have this like cable towing this asteroid into orbit. But of course, another risk of gold is alchemy, because someone may have already discovered a way to knock an atom off to make gold, and those are quantum risks to a precious metal. So I mean, to me, if I was looking at it, and I'd love Dan's take on this, I think Bitcoin is, I agree with him, it is a great way to transfer value, and that is more important than the fact that some wallets are at quantum risk.
Tom, I'd say your time in wireless is so applicable here because this is wireless money, right? Like, people didn't need landlines. Not obviously need a bank, right? When the regional banks were exploding, 3 summers ago, they were 13-to-1 levered in offering people instant access with one click on their smartphone of all of their capital back that same day. If you try to issue a stable coin, if you go on Twitter and say you're going to do that, where you're going to raise 13-to-1 leverage and buy a bunch of super long dated risky assets, and if they go up, I'm going to keep the money, and if it goes down, I'm going to stiff the taxpayer, it'd break the internet. People would be so pissed. And so that'd be my kind of non-consensus view, is that 4 billion people, like Tom said, do have a wireless device. That device is going to have crypto on it within not too many years, 3-4 years. And that will take at least, I would say at least half of all banking deposits over the next 10 years are going to go to stablecoins because they are superior.
Excellent. Well, with that, I think we need to wrap it up. Please, everybody, join me in thanking Tom and Dan. Thank you, guys.
Thank you.